What's up, everyone? Welcome to the live office hours. Today is a co-living special, primarily focused around exactly what the majority of people ask me. I work with people who are very experienced real estate investors, and I tend to help them really scale their portfolios to financial freedom. Basically, okay, I'm buying real estate, I'm doing deals. I want to know how I can do more deals, how I can do better deals, how I can fund those deals using little to none of my own money, how I can have better business operations systems, all of that kind of stuff. And I help existing investors scale to financial freedom through my Super Investors Mastermind. The reality of that is that it's not the right fit for everyone. It's the right fit for those that are already doing the business and want to take things to the next level. But on top of that, I get tons of other, like hundreds, if not thousands of people have asked me over and over again, if I was earlier in my investing journey, like what would I do to achieve financial freedom through real estate? And honestly, I'm going to break that down for you guys in this video, and hopefully it is extremely beneficial for you, regardless of where you're at in your investing journey. And you're going to realize that it's not really that hard once you have the step-by-step guidance, once you have the step-by-step blueprint on what to do, and then how to actually grow your portfolio to achieving real financial freedom. So we're going to start basically with the goal of how would you start and scale a real estate portfolio to financial freedom? Well, the first thing you have to do is you have to choose an investment strategy. And if you've been following along with anything that I talk about, including the co-living mastermind and master classes that I do and all the trainings and all the resources I provide, there's a reason why I focus on what I call my 3 pillars, or like my super investor blueprint, right? My 3 pillars of what has allowed me to achieve the financial success that I've had in the real estate investing space, right? You don't go from zero real estate while active duty military to over $25 million of real estate, cash flowing you tens of thousands a month, building you hundreds of thousands of dollars of wealth a year. You don't do that without the right strategy. That's the very first thing. And there's a reason why I focus primarily on co-living, so I can buy properties that generate way higher cash flow. They're in way better, bigger markets, so I get way more wealth benefits. And I leverage creative financing so I could buy more of these properties and boost their returns by putting in lower down payments and by getting lower interest rates, meaning more cash flow. And why the third pillar, capital raising, means I can buy as many of these properties as I want because money is no longer my bottleneck, which is a huge bottleneck for the majority of investors. So with that, let's not get too far into the weeds. I just want to explain my investment strategy is those 3 core things. For the vast majority, you just need to understand co-living. What kind of investment do I want to do? And it is co-living. There are a variety of other strategies, and I explain it in the co-living masterclass, so please feel free to watch that, why it is head and shoulders above midterm, long-term, and short-term rentals. It's not even a comparison. And it's way more accessible than something like an RV park or a large multifamily, which could provide you wealth, but it's a lot of work and effort to potentially get one of those deals where you can at the same time go buy 10 co-living deals and be financially free already without all that headache. So the focus is how you can start or scale your co-living portfolio to financial freedom, right? Whether you've already done real estate or you're brand new into the co-living space. So we're going to start out. We have the investment strategy. Great. Let's understand some of the numbers around co-living real estate, right? You're taking a single family home, you're renting it out by the room to individuals, right? You're using all the tools and software and management out there. So it's not a lot of actual effort for you for the management, but you are taking a house, converting it to be rented out by the room, and you're renting it out by the room. And that tends to generate, like, I'm not buying co-living deals that generate less than $1,500 a month of cash flow after expenses, reserves like vacancy, maintenance, and capital expenditures, and property management. So I'm looking to buy properties that generate no less than $1,500 a month every single month, or $18,000 a year per property, right? On top of that, because we're buying bigger, better properties, that property is generating us over $30,000 a year in debt paydown and property appreciation, as well as tax benefits. So we're getting $18,000 a year from one property in cash flow after reserves, and then we're generating over $30,000 a year in wealth from appreciation, debt paydown, and tax benefits. Great. So we're going to do co-living. You're going to make $1,500 a month of cash flow per deal. Understand that we have plenty that generate $2,000 plus, right? But for the sake of this example, let's focus on $1,500 a month of cash flow per co-living investment. So you have your strategy, you have the expected returns, So then how many of those properties generating you $1,500 a month would allow you to be financially free? That's really up to you. Financial freedom is very personal. How much money would you need coming in every single month that would cover all of your expenses and then some, while also building you massive wealth in the background? How many of those would you need is dependent on how much money you're looking to spend a month. I'm going to go a lot higher than maybe what you actually need, but let's say you want $15,000 a month of cash flow. If you're getting $1,500 a month from one property, you're going to need 10 properties to generate $15,000 a month of cash flow, right? Each of those 10 properties generates $1,500. That leads to $15,000 a month of cash flow. To be quite transparent with you, that is an absurd amount of money. I want people to make as much as they want. That's a ridiculously large amount of money to make per year doing little to no work every month. By the time your properties are stabilized, you're spending only a couple hours a month, if that, overseeing the operations because you've already hired out everything, right? The $1,500 a month is not income. It's everything that you're receiving in cash flow after paying all your expenses. So let's say you want $15,000 a month. You will need to buy and own 10 co-living rentals. $15,000 a month is $180,000 a year. And that's tax-free because we're talking about real estate. So $180,000 a year tax-free from your co-living portfolio, and more than likely less than 5 years. If I've been able to build close to 100 units, right, 100 properties in less than 5 years starting from zero, you're definitely able to buy 10 great cash flowing deals with all the value I share and provide to you guys. So you're going to buy 10 of those deals in the next 5 years. So that's 2 every year. That seems pretty freaking easy. I understand it might take you 6 months or even 12 months before your first one. Well, then you're going to stack 2, and then you're going to buy 3 in a year. You're going to buy 4. That, like, it doesn't have to be 2 every year for 5 years to get that, right? And you could do it way faster as well. So you want to generate $15,000 a month of cash flow a year. It's going to come from 10 cash flowing co-living investments generating you $1,500 a month per property. That translates to $180,000 a year tax-free, right? With just a couple hours of work a month once everything's stabilized. And on top of that, you're not just getting $180,000 a year of cash flow from this portfolio of 10 co-living rentals. You're also adding $300,000 of wealth every single year from that portfolio, right? We said $30,000 of wealth benefits from appreciation and debt paydown and tax benefits. Well, that is, you're stacking those as well. So you're getting $180,000 a year tax-free for a couple hours of work once your portfolio is stabilized. Now you're completely financially free. I mean, there's no reason why you couldn't enjoy your life and do whatever you want to do. You've replaced the vast majority of incomes out there. I think like less than 20% of people make over $100,000 a year. I think it's less than over $150,000 a year. We're going to make $180,000 a year in cash flow, tax-free for just a couple hours of work a month, and you're going to benefit another $300,000 a year of wealth benefits. That's almost $500,000 a year in cash flow and wealth once your portfolio is stabilized. And the coolest part about real estate is things always go up in your favor. Because you're buying properties with fixed debt, your expenses don't go up as much as your income and your wealth benefits go up. Your cash flow is more likely to increase in the future, just like your wealth benefits are more likely to increase as well, because properties appreciate, and that appreciation is compounded. Your debt gets paid down faster and faster and faster the longer you own a property. Your tax benefits, well, that's going to be the same, right, throughout the process. All right, great. We have your plan. You want to be financially free through co-living investments. Each property is going to generate you around $1,500 a month of cash flow, right, per month, and $30,000 a year of wealth, right? You're going to need 10 properties to generate your $180,000 a year of cash flow, or $15,000 a month. That's going to also add another $300,000 of wealth per year, right? Co-living, $1,500 of cash flow per property. You want 10 of those to make $15,000 a month of tax-free cash flow and $300,000 of wealth, or basically $500,000 every single year in cash flow and wealth for just a couple hours of work a week once your portfolio is stabilized. Great. So how are you going to actually acquire 10 high cash flowing co-living properties? That's the very next step. We got your strategy. We got the financial estimate. We got the timeline. We said we're going to do it over the next 5 years. So that's averaging 2 properties a year Obviously, you can do it much faster. I'm a perfect example of that. The thing to understand then is, well, I need to actually find these deals. So what does the process look like? That's the next logical step. You want $500,000 of tax-free cash flow and wealth benefits a year from your 10 co-living properties. Well, you got to actually build your portfolio of 10 co-living properties. So what is the process? Well, I'm going to simplify it for you. Basically, you need to know how to find investments, right? How do you find these co-living properties? Where do you look? What areas, what markets, what states, what cities should you be investing in? Where does it make sense for co-living, and where are there great economic factors for co-living, or just in general, but also for co-living? Once you find those, okay, what types of properties are you looking for, right? It's not, you got the city, right? Well, where in the city should you look, and what type of properties are you looking for that will make you the most amount of money as a co-living investment? Great. So you find deals. Well, then you have to know how to analyze them. How do you differentiate what is a great investment from those that are mediocre or definitely bad deals, right? This is where people get stuck. They say, I want to buy real estate. I need 10 properties. Well, then they mess it all up by not finding the right deals in the right locations and not verifying that the financials, right, the analysis makes a lot of sense. So you got to know where to look, what types of properties to find, how to analyze those deals to make sure they're great deals. How are you going to fund those deals, right? You need to buy the actual properties. You've found a great property. You know it makes a lot of financial sense. It's making you $1,500 a month of cash flow. Well, how are you going to actually buy it? Where's the money going to come from? How are you going to finance it? So how will you fund the deal? Great. You funded it. It's under contract. You're going to close it, right? You're going to own the property. Well, then how are you going to get them ready for co-living, right? What is it going to take to make it rent ready? Well, typically, you're going to need to renovate the property to convert common areas into the great co-living rooms to rent out. Then you need to furnish those properties, right? And make sure it's the right amenities for the market and that you're doing what you need to position your rental listings above all of the other properties out there, your competition. And then, great. Well, then how do you successfully operate that? You've got a great property that's going to generate you over $1,500 a month of cash flow. You found it. It's in a great location, right? Great state, great city, great part of the city. You analyze it's going to be phenomenal. You funded it, you closed it, you renovated it, you furnished it, you did all of those things. And now you need to operate it. You need to get it listed and rent ready, right? Get tenants in there, manage the tenants. Even if you do what I do, which is outsource the management, you still need to understand the operations behind successfully operating a co-living portfolio. And as you scale your portfolio like that, well, that is what you would need to do. You need to find, fund, renovate, and operate a property as a co-living investment to generate your $1,500 a month of cash flow and your $30,000 a year of wealth benefit per property. Great. That is where people get stuck. And one of those phases, if you've ever been confused as to what the process looks like to become a successful real estate investor, I'm here to tell you, as an engineer myself, as an Army veteran, right, and an environmental and chemical engineer, thankfully, this stuff is not rocket science. This stuff seems daunting, seems challenging because the way that people make it seem, I don't know exactly why they make it so difficult, but when you break it down to its core, choose your strategy, understand your timeline, then you need to find the properties that fit that, right? Find them by choosing the markets, the location, right? All that good stuff. Finding the properties that make sense for your strategy, analyzing them, funding them, closing them, and then operating successfully. That really is the core of what real estate investing is. That is the step-by-step, what you need to follow. You just need to have the steps in between each of those, but that's the core overview of what it looks like to achieve financial freedom through co-living, or at least to generate the cash flow on one single investment. You become financially free by successfully doing that over and over and over again until you have enough money coming in that you cover all of your expenses, right? We said 10 properties would be that. So you have the blueprint now, essentially, to be able to buy your next co-living deal, right? Then you become financially free by stacking enough of those to generate enough total cash flow so that you never have to work again. You also need to understand that just because you go from 0 properties to 1 to 2 to 3, like, you need to understand business operations as well. That's a big component of it. So I'm going to share with you what I did and then what my recommendation is for you to do that, right? It sounds easy and like, oh, okay, of course, Michael, nice explanation. You literally, great. I got to choose my strategy, choose where I'm going to buy, all that good stuff that we just talked about. I don't need to go over it over and over again. The reason why I bring this up and highlight it so adamantly is because this is where the majority of people that I talk to are failing. They don't have the right process when they're trying to buy their very first investment, or they're trying to get started in real estate investing right at the very beginning, or buy their first investment, or scale their portfolio. This process is broken for them. They don't have a system around each of these things. You need to have a system in place to not only be able to buy one property, but to be able to buy and successfully operate enough properties to be financially free. That is the biggest differentiator from those that do and those that want to do, right? And this is how I assess it. So for you, think to yourself, if I want to be financially free through co-living real estate, or just real estate in general, where is my system breaking? Where is there a lack of knowledge, a lack of experience, a lack of support? Where in this phase do I not know how to find deals? Do I not know how to find and choose markets? Not know how to find the right properties? Do I not know how to analyze them? Do I not know how I'm going to fund them? Do I not have the money to bring in the entry costs? Do I not know how to convert them by renovating and furnishing them? Or do I not know how to operate them by setting up the listings and hiring the right team members? Like, where in this process does your system break? I can't answer that for you. I can answer based on hundreds, if not thousands of conversations with other investors at all levels of experience. It always comes to one of these core areas. And if they can successfully do this, they can successfully buy investments. The next biggest bottleneck is being able to scale this through the system to get enough deals, enough money, enough ability to renovate in enough areas, enough successful operations, not just for a property, but for a portfolio. Like, that's the biggest issue for those that are more experienced on scaling. That's really what I help them do in super investors. For when I'm talking to the vast majority of you, that's not even in your horizon right now. What you need to do is figure out your investment strategy, how much you're going to make. Just gave you all that, right? Your timeline, financial freedom, and then how are you actually going to find, analyze, fund, renovate, or rent ready and operate these properties. So what I did when I started out was it was good, but it wasn't ideal in hindsight. But I only know what I know now. I didn't know this when I was starting out. And obviously it still worked out pretty well because here I am. So how do you learn how to do all this? Well, it's way easier to learn how to do all this after you've already decided this is your investment strategy. It's a lot easier when you choose an investment strategy and then you learn the specific things that you need to, right? I've already told you, find, analyze, fund, rent ready, operate, right? It's a lot easier when you already have a investment strategy, because if I'm doing short-term rentals versus co-living, very different, right? You're looking for different properties in different areas and you're going to operate them differently. You're going to convert them differently. If you're looking at a long-term rental, you're not going to do nearly any renovations except minor. You're going to not furnish the property, right? Versus a midterm. Or if you're looking at RV parks, or if you're looking at whatever you're looking at, it depends. All these factors, all that you have to learn depends on your investment strategy, what you have chosen as your investment strategy. So how did I learn when I started? I did it a little bit differently. I didn't think through what is my investment strategy from the very beginning, outside of what can I possibly do upfront with the least amount of money down in my local market. And as an active duty service member, I had access to my VA loan, which means I could buy a 1, 2, 3, or 4 unit property, live in one side, and then rent the others out. Or if it's a single family, live in it or live in a room and rent out the other rooms with a 0% down payment, right? So that was my path to invest locally in small multifamily with no money down, or little to no money down, with my very first property. So then how did I learn how to do that? Well, I built my skill sets on finding and analyzing deals through like almost 2 years, 2 full years of reading a bunch of books, listening to tons of podcasts, watching a bunch of online trainings. And what finally pushed me over the edge to actually succeed and get my first investment was connecting with real estate investors that were doing the same strategy as me. That was the big thing that got me from 2 years of learning to, and that was great learning, right? And I was practicing, but that's what got me over the hump of actually being able to buy my first deal, was connecting with other investors that were doing what I needed to do. That gave me the knowledge and confidence that I needed to be able to buy my very first deal. And as I mentioned, it was a VA loan, house hack, So about a 2-unit property, we lived in the downstairs unit and then rented out the upstairs unit. That was my strategy. And I would say that's a great strategy if you want to invest in your local market because it makes sense to. You have solid credit, and if you're starting out. I'm going to tell you right now what I had to learn 3 years into my journey is that's a great strategy, but it's not really scalable to high levels of financial freedom because you need to buy more properties. You may not be living in a great market, or you don't want to wait the timeline that traditional financing requires you to do. Every single year you have to wait to buy the next property. Like you have to wait 1 year after 1 year after 1 year, and then you have debt to income issues and whatever. This is traditional financing limitations. That's a great strategy to start out, and I recommend the vast majority to do so, especially my fellow service members out there. If you have not utilized your VA loan, or if you're just literally anyone and you have good credit, you have good income, you can use a VA loan, FHA loan, conventional loan to buy a property for 5% down payment or lower. As long as you live in one of the units, you can buy up to a 4-unit property and go that route. That works well if you want a starting place, or you're open to it taking a lot longer, or having to live in a rental for the next 5+ years, right? So if you have solid credit, solid income, and you're okay with living that lifestyle, that is a viable strategy. It's just not very scalable.